morning everyone, this is Amit Pabari, founder and managing director of CR Forex. Next week there are three important events. One, there is a Fed meeting on 13th of December. उसके बाद में on 14th of December we have Bank of England and ECB का meeting, and then on 18th of December we have Bank of Japan meeting. These four central bank meetings are very important to get the direction of currencies in 2024. We expect all three, Fed, ECB and Bank of England, to keep the interest rate at the same level. Now then the question is, why this meeting is important? This meeting is important because from the meeting we can understand what is the outlook for all the three central banks for 2024. We are expecting Fed to be more dovish than ECB and Bank of England. It means that Fed सबसे ज़्यादा इंटरेस्ट रेट कट करेगा 2024 पे. If that happens, then it is negative for dollar index, which has been our stance from last couple of months, and because of which we are expecting dollar index to take a resistance near 104.50 to 105 kind of level, and gradually dollar index should move towards 100 level, that is the first target, and below 100 level by March 2024. If that happens, then it is positive for all emerging market currencies. On 27 November, when we have released a video, we said that Japanese yen is trading near 55.5 level. We are expecting Japanese yen to move towards 57.5 to 58 kind of level. This kind of level has been achieved. Now, what is the outlook for coming days? We still expect Japanese JPYINR to move towards 15.5 to 60 level. The entire logic is that Bank of Japan is going to increase the interest rate because Japan में inflation is still there and other developed economies में inflation कम हो गया है. Because of which, if Bank of Japan increases the interest rate in coming monetary policy, it is going to be very bullish for JPYINR. So any dips between 57.5 to 57.20 should be used by importers to cover their import payments in Japanese yen. Now let us discuss the outlook for rupee. Before doing that, let me show you an interesting data point. If you see the table from January 2014 till May 2014, before the election, flows were worth close to $15 billion, because of which rupee appreciated from 68 to 58, which is 10 rupees ka appreciation. In the year 2019, from January till May, we have received inflow close to $12 billion, and rupee appreciated from 71.5 level to 68.3 kind of level, which is appreciation close to 3.5 rupees. Now the big question is whether the same trend will follow in 2024. So basically, if you see after state election, results were out. In last 4-5 trading days, inflows were $2.35 billion have come in Indian equity and debt market, and we are expecting the inflows to come in next 6 months also because of stronger economic fundamental reasons. Second is Fed is going to loosen their interest rate. So whenever that cycle happened, inflows in emerging market comes. Third reason है कि JP Morgan bond index, we are expecting the fund to come in. Because of all of this reason, we are expecting inflows to come and rupee to appreciate. But you must be thinking that rupee is not appreciating. But let me tell you a fact that there are some days in the market when the fundamental value and the price of the asset class do not move in the same direction. The current state of rupee is also same, despite dollar index getting appreciated from 112 to 103 kind of level, Chinese and Japanese currency getting stronger, crude oil from 93 to trading near 70 kind of level. Because of all of this reason, still rupee is not getting stronger. Despite all of this reason, rupee is not getting stronger. And what I have learned in the market is that nothing stays undervalued or overvalued for a longer period of time, because of which we are expecting that 83.5 is going to act as a very strong resistance for the pair, and once 83 level is broken, then the pair is going to move towards 82.5 and below that. But for coming days or for coming week, we are expecting the pair to continue trade in a narrow range between 83.20 on the lower side and 83.45 on the higher side. Now let me discuss strategy for thin margin exporters like agri exporter or chemical exporters. A lot of thin margin exporters have started taking costing between 83.20 to 83.30 kind of level. So for them, we will suggest them that they should cover 80 to 100% of their exposure between 83.25 to 83.40 kind of level. If someone is waiting, they should keep a strict stop loss of 83.10 or costing, whichever is higher. Now let us discuss strategy for thick margin exporters like textile exporter or engineering exporters. We will suggest them that between 83.15 to 83.40 kind of level, they should cover 80% of their confirmed order exposure, and if they are hedging on an anticipation basis, they should hedge 55 to 60% of their exposure. Now let us discuss strategy for importers. It has been more than 45 trading sessions where Rupee has not traded below 83 level for a single day. And all fundamental factors are suggesting that Rupee should ideally break 83 and trade below that. So when there is a divergence between fundamental factors and the price of an asset class, at that point of time, it is important that any importer should not cover long-term imports. So we will suggest them they should only cover near-term imports between 83.20 to 83.30 kind of level. Near-term imports mean imports for next 10 to 15 days. With this, I will end my today's presentation. Jai Hind, Namaskar, फिर मिलेंगे next week. Thank you.